Hi, everybody. How we doing here? I believe we have Aggie. Thank you for coming. Drew, Freddie, Hobby, and Kevin. Thank you so much. Assuming folks can hear me, which I can see that you folks hear me. This is our first webinar. We want to discuss about banking technology and innovation that's happening in the technology itself. And bear with me, this is going to be the first one. So we're gonna wait a couple more minutes for people to jump in, and then we're gonna start like a one more minute. All right, let's jump in. So we have the banking technology webinar that we do, and it is about education, um, consumer needs in digital banking. So back when the 1980s computer was invented, no one had thought that transaction will be done through mobile phones. So PayPal was the first company was envisioning that, and with the help of eBay, now you see PayPal is a giant that have Venmo, that has Zoom, and all these companies that they own that does mobile payments, and it's a huge evolutionary event in the industry. So we're going to talk about the introduction, and myself is Amir. Most of you folks know me, founder and CEO of Zikher. I have done quite a few research in banking industry and its transition trends in digitalization and how it's going to move forward. A few of my friends are working in technologies that we will all see in next 2 to 3 years, and that it will be in our hands. So, future of digital banking. Let's talk about that. The future of digitalization, it looks very, most of the bank that we see today will not exist in about 10 to 15 years unless they digitalize. That is the future. Digitalization, mobile payments as we see now. Lending is a big one that needs to be discovered and discussed mostly because you still see a lot of folks still going to the bank and applying for those applications. And I'll give you my example. Yesterday, I went in and applied for a mortgage, and I just wanted to check out the process that they do. And this bank is one of the largest banks in one of the largest credit union in San Francisco, called San Francisco Fire Credit Union. 7 billion in assets, about 5 branches, very wealthy rich bank. I went there, and they called me in to sit down with the loan officer. I sat down, I filled out the application. That took me about 30 minutes to go over page by page the documentation. It was so complicated. Uh, and it was really complicated. And then after that, I said, well, how can I send you a documentation? And so we use a system called Barracuda. Barracuda, if you don't folks don't know, it's a technology that encrypts the data. Yes, it's good, but it's not secure. So I hesitated and told him about that. And I said, well, how about I deliver, like, what's the other option? I said, you have to deliver your documentation hard copy. And I said, well, I won't, like all of us, we work 9 to 5 jobs. I said, I won't be able to do that until Saturday morning, or if I have to rush early to the bank. And that's what this life is about. I mean, currently, you apply for these things and you have to go to the bank. And if bank wants to stay relevant, that is something that they need to focus on, mostly on digitalization. As customer segment, product improvement is definitely the second one. Then the last one that you see is simplification, and I tend to agree with the research that they have done. I think it was a Cell Group that they've done. Simplification, I believe simplification should be number third, due to the reason because these documentation is so complicated to for millennials to understand, for the future generations to understand. The wording is so complicated. So if we do the a simplification of these, let's say in loan or credit card or auto loans, and make it more simplified that people apply for it, makes their life more efficient in a way. So digitalization, as I said, it's absolutely necessary in the for the banks to understand. And there's a few things that comes to my mind when we talk about this, how banks can actually improve and and benefit from it. So first one is absolutely the improved customer experience. That's no, that's definitely a go. I mean, they need to have the best of the best customer experience. So if you pick up an iPhone and you see the apps, Uber apps, and all these things, that is something that we see every day, and we're so much used to the newer technology that when we go to the old 90s platform these banks have, the customer experience that they have is absolutely terrible, and that's something they need to really focus on. Re- Digitalization also reduces cost for the banks, banks and customers, I would say, because then it's a cashless transaction for banks. They're not paper wastage. Then you have less of the employees handling most of the data and securely. So these papers are coming in and they're getting trashed out. I mean, the security, the cashless transactions makes it more benefit for customer and bankers to get involved in digitalization. And the third one that I would like to discuss is number of customers. Well, now we see if a bank wants to get digitalized, so it's like smaller bank will go, let's say, a credit union, and let's say example, somewhere in remote Idaho, they have the entire Idaho license to cover. They have limited customers because of their digitalized, they're not digital, so the customers around is like two towns further down. If they digitalize and market it right, then they will have customers reaching out from them from remote sectors of Idaho. So that's increasing, they will see increasing customers. Digitalization also removed the human error. So that scratching of the paper and all that, entering the paper right and double entering and triple entering in systems, it causes human error. And that's the one thing. If one set of documentation can be entered by one independent party on any other end, and then it'll just like sync over all the different parties, that reduces drastically the human error. Uh, Maintaining the bank accounts. I mean, this when it comes down to digitalization, now we used to have. I remember we used to have passbooks like the bank books where you have different accounts and you're depositing money and then you are scratching it up and doing it all over again. Then you withdrawing money, then you did the marking in the book. That is actually the maintaining. The maintenance was crazy, but now you see, you go on the online banking app, you say, well, I took that out, transferred that, I traveled that. And it's easy, it's efficient, you can do it remotely online from it. And last one, all accounts to productivity increase in a bank. And that is absolutely undeniable fact. We have, next thing we're going to talk about, understanding the borrowers. Now, current generation, now we have a generation that's moving forward from most of the generation that's has, I would say, a need of understanding of lending in a way that I would talk about is a generation from 18 to 24, which is just getting right out of high school. They're not per se, they're not asking for mortgages. They're looking for like student loans. That's the big one right there. They're looking at they're looking at auto loan. They're looking at credit cards to build their credit. And this generate these folks are like, I would say that they haven't seen not a loan application paper based in their entire life. They're used to that mobility factor. They're used to that digitalization factor. So understanding that banks and financial institutions should understand these other folks are the ones they're dealing with mostly. It's 18 to 24, 25 or 25 to 34, and lastly 35 to 44. And these folks are, I would say, middle-aged parents who do know, like, who are used to the iPhone. So it's generation change is happening, and as moving forward, the more generation will be used to the experience of of a cell phone and digital experience. Millennials, let's talk about them. All banks wants to get millions. They want to understand them. Who are they? What are they like? I mean, what do they understand? What the beliefs? What they believe in? How do we get them? And that's the biggest challenge the banks are facing currently, even small and mid-sized banks. So millennials are folks who are born from 1980s to early 2000s, and they are the ones who are like from 24 to 35, that age range that comes in right now. And it's a shocking factor that most of the millennials do not do think the banks wouldn't exist in future. They won't need to rely on bank because there's a Venmo app and all these transactional apps are coming in fintech. And they actually do not do. About one third of them do not believe. Uh, then we come to about 99 of them. 99% of the bank use, although they're connected to the internet, the 96% of them use banks and credit unions currently. Only 4% use online banking. The reason is the service, the customer service. Online bank, when you do that entirely online, I'll give you an example of Ally. When Ally came out, and this was early, I believe, early 2000s, late 90s, early 2000s, Ally was trying to build up their credibility. They were like, well, this is the next generation of future. This is it. We're coming down to it. Ally thought right in a way, but they forgot about one part of banking, which is really is that human in the human exchange we do. I mean, you can trust a computer. Yes, it's going to automate everything, but the human touch is the key factor that millennials still rely on. I mean, you see them walking to the branch a little bit here and there. You see it less and less that daily, but they still are going. Is the fact that banks still have chance to improve their customer service. Most of the like being myself a millennial, I call it. Most of the millennials, they do not have any loyalty ties to the bank. Let's say if they don't feel their bank is not doing its job, they will change it. They will move on right away. According to a survey did by I-25, about 56% of them said that we'll move it in in few months if our banks is not satisfying our needs, if they're not digitalizing. So that's what we something we look for. When it comes down to digital experience that they look for, civilians or anyone, I would say mostly millennials, but anyone, if then they're judging a bank's digital experience, digital offering, they're not judging it because, so let's say, for example, if they're judging a digital offering of a San Francisco Fire Credit Union, they're not judging it just because Chase doing better. They're judging it with the Uber apps. They're judging it with the Grubhub app, the apps they're every day using, FaceTime, iMessage. So that smooth transactions, that's what they're judging it, and banks need to catch up with that. Uh, According to Morpheus, 92% of the millennials chose their bank on the digital offering that they provided. So you will see a lot like Chase is trying really hard. They implemented Roostify recently. Roostify is one of the best lending mortgage company who does the smooth, amazing interface that they take care of everything on the front end. You see the mobile bank app has now a fingerprint scanner. So they're adapting slowly. But coming back to smaller banks, they're not as adapting slowly that we want them to, and the market needs it currently. Consumer expectations, mobility, and that's something that we want to discuss. But today, we don't want to go to the bank. We want everything. We have one thing called the iPhone or Android, or you might have Samsung something, or that is part of our life. That is part of our daily life. We want all the transaction done by then. We want I want to apply my loans via this phone. I want to check where they are. I want to apply the credit card. I want to check my balances. I want to if I ate with my friends, I want to send them Venmo payments through that. So mobility is something millennials are highly looking for, and that's something very challenging to the banks to understand. And being the executives of the banks, I mean, they tend to be a little bit in their like in the older age, and they're getting into it, and I see it every day. They're reading the papers comes out, and but I think they need to move faster on these mobility because it's a trend. I mean, it's you need to be mobility is a trend, and it will be there. It's not like it's going to go away, but you will see the rise of more fintech apps coming in. So fintech apps is the apps that deal with financial technology. So Venmo is one of them. Zoom app is another one of them. Then you have these financial advisory app where I can save. In Voodoo is a friend of mine owns that company where they do is, and it's a funny, very nice concept is make these digital envelopes. So now you don't need a bank anymore. So they have their own one bank they tie up with. You go on there online, you transfer everything to their app, and it holds all your deposits, so you can divide your deposit between this is for anniversary dinner, or this is for it's more about personal cash management. It's amazing. I like for you guys to check it out, and Voodoo is really good app. Personally, interesting app. So mobility is definitely where it's heading towards, and and I recommend everybody to focus on mobility where the banking is heading. Transparency. Now, this is something that we discussed earlier, I think, with Agi and a few other folks before. It's highly important for banks to provide transparency. Right now, if I apply for a loan, I'll have to call them up multiple times to find out what's going on with it. That shouldn't be the case. Like, like in a day where I know I can pick up my phone and I know where my Uber ride is. I mean, Domino's that comes in, they tell you pizza is going to be in 5 minutes around the corner. I don't have to. I shouldn't have to do this. I mean, this is something that the banks have to understand to provide transparency. They have to push notifications to the customers. They have to tell the customers, okay, well, this is what we need from you, not the cut down the other way around. I am a busy consumer. I have 9 to 5 jobs. If I'm applying for a loan, this shouldn't be my job to call you on my lunch break. Hey, what's going on with it? That shouldn't be. I need more transparency in it. That's something that millennials really do look for in a banking platform or a bank itself. Immediacy. Now, this is the funniest image I found. Immediacy is something that we all look for. We don't want to wait in line. No one likes that. No one likes that. So coming back to the lending part recently that we discussed, is it takes about earliest. It will take uh, about 30 to 60 days for a mortgage to close. I mean, they'll give you pre-approved and stuff, but to close it, that's what it takes. And now you see Rocket Mortgage is doing it. Quicken Loans is doing it within 7 days. You can fill the application in 7 minutes, and they can do it in 7 days. That's amazing. That's what, and you see, and you will you'll see that Rocket Mortgage is the biggest mortgage provider, non-bank mortgage lender in the country. You know why? Because immediacy. They provide that. You will see the consumers are looking for that. Immediacy is something that they want. Um, these are three things that millions are looking for in a bank, and this is what my first webinar concludes. And I hope able to teach you folks things. And again, I'm a founder of Zikher, and I would love to take some questions if you have any. I will open Q&A. Any questions so far? Anyone's learned anything? I can see the chat. Right, no questions. Well, thank you so much for joining today, and we're looking forward for you folks to learn a little bit more about Zikr. Please let me know. I'll be emailing you folks. We can happily engage in conversation regarding that, or if you have any questions regarding the digital banking side, happy to answer anything. My email is directly sharing right here. It's amir@zikr.com. Please feel free to email me if you have any questions. Thank you so much for your time, and I'm looking forward to talking to you folks, all of you. Thank you so much.